Property loan stock company Arrowhead lists on the Johannesburg Securities Exchange today, and we cross now to the JSE where Gerald Leissner, CEO of Arrowhead Properties, is standing by. Gerald, thanks so much for joining us this morning. Let's get straight into it. As I say, we've got Arrowhead Properties making its debut on the JSE this morning. What's motivated the move?
We've seen a gap in the market for a stock that's relatively high yielding in the property sector. Apex High really performed that function over many years. That was taken over by Redefine, and we thought that there was an opportunity. We also saw that there was probably funding available for this kind of venture, and that's why we went ahead.
Let's take a look at the offering that you're putting on the table this morning, Gerald, because we're looking at an opportunity for the risk averse and for risk takers that are out there, and that with the options of A-linked and B-linked units. Run us through that and what exactly we're looking at.
All right, we're projecting a distribution in the first year of around R1 for the A and the B unit combined. Every unit holder gets an A and a B unit, and the A unit will get the first 60 cents before the B unit gets anything. So on the basis that we're going to do R1, the A unit gets 60 cents and the rest goes to the Bs, which would be about 40 cents. When the distribution, when the A's are earning 50% of the distribution, for instance, when you get, so that's when you get to R1.20, then the A's and the B's start to participate evenly. So for your risk-averse investor, the A unit gives almost a guarantee of 60 cents until you get to R1.20, but it won't fall below 60 cents, and the B's get the difference. So the B's are almost have a double layer of gearing. The gearing that you get from the bank, and then the gearing that you get from the A unit. So the B unit is really a speculative unit, but for the first couple of years, if the company grows, it's supercharged. The A unit is really a safe unit, and it's good for people who want safe, steady income.
Let's take a look at exactly what investors would be buying into. I mean, you boast that you're the only property fund in the South African market offering quarterly distributions. So that's one of the incentives that you're putting on the table. But take us through your business exposure and the investment case that you're putting on the table.
Look, as I said, it's a high-yielding stock. We're going to be buying properties which have probably a lower lease profile, smaller properties throughout South Africa in the country towns. We will not be focusing on A-grade properties. What our real focus is to grow the portfolio in order to handle the risk and to be very, very conscious of the tenants that occupy our properties. So the risk is managed by quality of tenant and size of the portfolio, and it's a company that needs to grow. It's starting off relatively small, about 1.7 billion rands worth of property, and we hope to double that in size within 12 months, and hopefully over the next 5 years have a market cap of about 10 billion.
So typically, what would be your tenant profile?
Across the board. I mean, in the retail side, it'll have a mixture of the national traders and small traders alongside the national traders. Offices, we've got 20% of our portfolio at present has got government tenants. We'll have some of the banks, and then we'll have straightforward tenants. And industrial, because ours would be generally smaller properties, we would have startups, people that have been in business for reasonable periods of time. But as I said, we would have to concentrate on the type of and the quality of the tenant.
Yeah, of course, you've got properties that bring with it now scale and diversity to your portfolio. Gerald, what's the state of the rental markets to that exposure that you have right now, and then relative to what levels of vacancies?
Okay, our portfolio is starting off, we've got about 400,000 square meters of space. We've got 18% vacant, which we see as an opportunity. We'll be very, very conscious of seeing that we can keep that or improve on the occupancy rate. In this particular portfolio, we think there's upside in the rental levels. Because of the short lease profile, we haven't got long leases that have been escalating at, say, 8, 9, 10% for periods of time. So I think on expiry of leases, we'll be at market rentals and maybe a little bit below. So I think that for our portfolio, there is upside. The rental market generally, I think offices, other than A-grade offices, I think tight, difficult. retail seems to be performing quite well, and the industrial sector has been surprisingly good in the last 12 months.